the conversation out of this. Okay, so I bought some calls and a put, or wait a minute. There, some puts for Google, and I shorted on Google. So I am in the money there, and let's look at this is all disorganized. So I've looked at all of this. Where's my bid and ask? But I am going to just take that profit, and I'm going to go ahead and close that, and I'm going to sell those puts. And that's a tight spread, and I'm okay with doing a market on that. Something looks off. Am I second guessing myself? Yes, too much. And I'm just gonna go for that at the ask. There we go. Oops, that's not what we want. Too late. Alright. So yeah, I am really tired. Positions. So yeah, I did that right. So I think I took I was going to do a straddle, and I decided against it. And I think that was because of the premium price, but I expected the same directionality, so which was kind of sideways because of the volatility, implied volatility, historical volatility, and the IV percentile. So I interpret this as the implied volatility has only been lower than it currently is 33% of the time, year over year, and historical percentile. Historically, the volatility, implied volatility percentile has only been lower than where it is right now. 59% of the time. So I would interpret that as it is on the spot, so my brain shut off. So that's normal. So well, it's usually most of the time lower than this is what I'm interpreting this as. So historically, so I went through all of this, the fundamentals. I probably didn't review. No, I saw that it was set to outperform. I didn't review the profile enough. I was a little hasty there. And I didn't look at the level 2 quotes enough. But what I looked at, all of this, and I'm not gonna lie, I did see it as a good investment as a trader, even though I have my opinions about tech right now and too much going into it. I try not to trade emotionally, but there are just some things that I just won't invest my money in. If I am trading, this is paper trading, so I mean, like oil, not to knock the oil industry, nothing personal. I just think it's bad for the planet, and the oil industry would be better off if they were to ease off their investment in what they're doing, their infrastructure, and navigate towards clean energy. I did look at the 52-week high, saw that, and I was preparing it for it to drop, except and I did look at the Greeks. So this changed a lot. So I think recently. So I think what I looked at was that so it's the volatility is usually lower. So meaning it indicated to me that the volatility wasn't usually high, even though it was 33%. So usually it's more stable, and that makes sense if you have a beta of 1.08. I think. Correct me if I'm wrong to yourself. So, but I would think it would be relative to the stock, whether or not an IV percentile of 33% meant anything at all. For one stock, 33% might be high volatility, and for another, it's not the same. They're not 1-to-1, of course. So like 44% may be, high, but without taking into consideration other indicators. And I'm seeing that a lot of people that trade on YouTube, they don't do this. They do what I call tech spec, or what I've heard as technical speculation or charting analysis, and they totally rely on so I've even given up the tool. Like I don't even use it anymore. So I even forgot the name of it. They are, what was it called? Let me remember. Lines of regression, and so where's the tool? Let's go look at the tool. Drawing, new drawing, and regression line and Fibonacci extensions. I do believe in mathematical probability, but and then that could give a good idea when you're looking for a pullback, or yeah, when you're looking for peaks and troughs, over a certain timeline. Um, and So as you can see there, I wasn't greedy on that trade, and I could have been, but um, I saw that it was, that my profit was going away. I've seen YouTubers, just trading and losing their life savings, and they don't rely on fundamentals. They don't rely on key indicators and reports. They will rely too much on too heavily on charting analysis. And what I call tech specs. Math is great. Fibonacci extensions are great. Regression lines are awesome. Drawings are cool, but as we know, that is not a predictor of the movement of the stock. It'll give you an idea of what we could expect mathematically for lines of support and resistance, but it doesn't reflect reality of movement. I mean, I don't want to give that too much weight. I'm saying it could be a helpful after tool, but people get confused because they'll fill up their chart with so much junk, so much material, right? Instead of the basic things they need to know to predict a trade. And before you know it, they're losing money because they are all over the place trying to perfect this line, trying to chase their tail before understanding things about what they're trading, like what I haven't mentioned yet that you may think that I have forgotten about, but I haven't. So let's go to what I traded, and that's the Greeks. So let's go positions. And that was for December 19th, the 320 put. I wanted a long runway on that. And yeah. And where did I profit loss for the day? Profit loss. Since open. See, it's still. Yeah, I was confused for a second there, but I forgot I'm holding up a put. So, this is a good trade to me. And I want to explain why. So now I could take that and the money. I have to reorganize these. It's kind of annoying me. But because usually I've got my beta, vega, gamma, so, and delta, and so it's taking me time to progress to the level that I'm at in regard to understanding those things. But I'm the kind of person that if something breaks, I want to know how it works. I want to know how it ticks. So I lost like $2,800 when I was last on the market, and it made me realize that I cannot step back into options until I actually know what I'm trading, the mistake I made is I seemingly made a great profit on some calls that I was holding, call options. And let's look at that. It was the 320, December 19th. And what happened was I sold on a zero bid. And I sold on a zero bid. And I think there might have been, or zero zero ask, and it might have been zero zero. So it was it was near expiration, and so the contract sold for a penny on each share. Um, yeah, and that was a mistake. So I learned to not make a trade like that unless there's volume, a tight spread like this. And see right there, you just saw me make a decision. I said it was okay to sell at a market price, so I did that. But in the future, when I see that it's not okay, or if I don't trust that there is the volume, available, like we see here, I'll set a limit or a trailing stop limit, something like that. And so I looked. I think I just briefly looked at these deltas, just skimmed them. I mean, the Greeks here, but I didn't. I intentionally, you know, set up for the 3 week out expiration, and I just I trusted what I saw, but as a trader, you should probably do more research, but, I'm getting to realize that, with time decay, and, theta and delta and gamma, it's more important to pay attention to it later, but right up front, when you could see these, with a change of a dollar, the underlying, your brain, it just clicks and you get it. And the rate of change of delta right here, and time decay right here, and vega, what to expect and change in regard to movement of implied volatility. They could go one way or another, in regard to earnings or political events or anything like that. So I think I accounted for that, and I was expecting a bubble. So I'm like, but I also looked at this. I go to Google and I go, and what I saw was something that was overvalued over the course of 6 months. And I'm looking at the state of our dollar. And, we can only pump so much into the tech industry, and we're just running on E. And it's only going to be a safe haven for so long that people are going to want to take those earnings. So I saw, at least in the short term, that this was a good trade, and I looked at the money flow index here, and it turned out to be correct, but for 20 days. See, this is for short term, so I would see this as overvalued. over the course of 3 months, and it's nearly overvalued enough. So, and here we have the 50-day moving average, and I think or exponential moving average based on VWAP. Calculation, I think, yeah, and 150-day, I think, something like this. Let's see, studies. Oh. So these are outdated for me. I made some changes here. Yeah. So I have to make some changes, and this is paper money, and I'm not sure if what I have for my studies is saving, but just keep it here until I go back and make changes. But my studies and my watch lists are more updated, and this is really old, and I'm thinking it's not using my current set of studies, but it's good enough for now, I think. But yeah, so without being too long-winded about it, that's it. And I look at my position. And I might hold that long, you know. And I've got Newmont right here. For puts, was I purchasing a straddle, it appears, yes. And I'm going to go ahead and take that. That's too late, I don't own it. But that's one I'm not going to be hasty with. I'm going to really look at that one. I really missed out on that one. I really did. I thought I placed a trailing stop limit at the market. I did, and I think it was 10 cents. And I don't know what happened. I think I sold. Nope. So something happened. But that call is something I'm going to look at, because and the foot or something like that, I may. I don't know if I'm going to purchase that as a straddle, so I'm going to back out of that one. And I may have it as a trailing stop limit for the total market. So it may still be trying to pin down the best price for this straddle here. So, but I'm working against time decay here, but not much. So I'll analyze that, but I'm not going to rush it. And I'm going to start trying to be more focused on, preparing to get back into the market. So, I mean, we feed the machine too, so got to do something. That's all I seem to be good at, kind of. I don't know, I'm good at a lot of things, but probably better here. So orders. Buy at 755, trail stop. The market. Stop is 780. 780. So for the straddle, it'll be filled at the most favorable price, and I think that we, in regard to directionality based on volatility, I'm not sure because I'm not used to doing trail stop limits for straddles, so this is interesting to me. So let me show it. And let's go for the day. And let's go for 10 days. The price has dropped. Okay. That tells me something. I would have to weigh that against time decay, or maybe even see if I think this is a good entrance. Because it might be, but I'm going to look at the underlying. So that's all, but I'm going to go take time to focus on this order and not make a hasty, stupid move. So some of you out there that know this stuff are probably shaking your heads like you don't know what you're doing. I hope that I'll figure it out. Hey, at least I'm thinking about these things, right? So, at least I'm trying.